Tuesday, February 18th, 2020, MONERO 64, home of alternative economics and contrarian views. So stock market index futures have tumbled and bond yields have tumbled overnight as Apple warns. So I'll quickly go over the story and then I'll look at the markets. And I want to note as well that I did a video yesterday, which by the way was demonetized only because I used the C word as it pertains to China, what is happening in China. And overnight and late yesterday, we saw that Apple has warned about what is happening in China. And I'll use the word or the letter C instead of the whole word, because I don't mind being demonetized for one video, but not every video. So investing.com says here, stocks, Europe seen lower, Apple and HSBC weigh heavily, investing.com says. So I'll go through the story, and when they use the C word, I'll just say C. European stock markets are set to open lower Tuesday as a revenue warning from Apple and weak earnings from HSBC laid bare the extent of the damage caused by the outbreak of C in China. So yeah, I highly recommend the video that I did yesterday. It gives you my opinion on C in China, looking actually at tourism and travel and how important that is to world GDP. So it'll be up in the cards, down in the description below, so you can see what I think. And this, what's happened to Apple and HSBC makes sense. So right now, the stock market is down almost 0.75%. The Dow futures is down 202 points at 29,261, right near the lows. S&P is down 22 as well at 3366. These are the futures, of course. NASDAQ 100 future, that's down 120. That's a tech heavy index, of course. That's down 1.25%. Haven't got the price for Apple right now. It's not trading yet, but I'm sure it's gonna be trading a lot lower when it opens. So yes, in the video from yesterday, I only covered tourism and travel and how an impact it can have in the economy. I personally think people, and especially the markets, have been burying their heads in the sand as it relates to what's happening in China. And I think we could have a wake-up call right now for the markets. The other point I'd like to make is the bond market, the 10-year yield. That's a signal of whether the economy is weak or strong. Right now, the bond 10-year yield is down 4 basis points. It's back down to 155. And as you can see by this chart here, we've been consolidating between like 160 and 170. It's formed like a flag. The trend has been lower since the beginning of 2020. We started almost at 2%, the 10-year yield. And I think now it's could be ready to move lower. We could see it test the lows for the recent lows in the summer of 2016 at around 134. And why is it bad that bond yields, the 10-year yield is going down? Well, it shows that investors are not as confident in the economy. Of course, when bond yields go down, bond prices go up. We saw last week, I made a video about what's happening in Europe, and it's the same thing. Europe is leading the way in terms of this rush to buy bonds, this rush to get yields, and that drives yields lower. Bond prices higher, yields lower. I'll put that video up in the cards as well. And as I said in my video yesterday about C in China, Europe will be the hardest hit initially, at least from travel and tourism. Europe is the major center for tourism worldwide. According to statistics, last year or the year before, I'm not too sure which year, there were 1.25 billion international travelers in the world, and 700 million of those went to Europe. So watch out for the European economy. So now I'm going to look at where the markets are, precious metals in particular. I actually think gold is ready or poised to go a lot higher. I could see it going towards 1650 or even higher in the medium term. By medium term, I mean a week or two, maybe a little more, and I'll tell you why. So, by the way, it's 7:40 a.m. London time. For those of you who are new to the channel, I am in London. What I usually do in the morning is cover the markets, the pre-market for the US markets, stocks, foreign exchange, trade, actively in London, even the US Treasury market. I used to work in the city. This is what I used to do a lot for my US clients. They came in, I used to tell them what was happening. I was a futures and options broker. So right now, spot gold is looking pretty good. It's up 7 at 1588. We're right on the highs. Before I go on to silver and the rest, let's look at this chart of gold. It's a weekly chart of gold. And I want to take you back to the move we had last year at the end of May when we went from below 1300 and then eventually broke that 1375 resistance that was really important, had been a resistance for a few years, and then we took off. As you can see, there was, after breaking that 1375, there was a period of consolidation there, and it took 1, 2, 3, 4, 5, 6. It took about 7 weeks, and then it went back up, and it traded all the way up to 1556. That was by the beginning of September last year, of course. And then we corrected. We formed another falling wedge like we did before May last year. And then we started taking off again. We made a new high in the beginning of the year with the situation in Iran when the United States assassinated a general in Iran. We went up to 1610. And if you look after that, it's been 1, 2, 3, 4, 5, 6, 7 weeks. So we're in the 7th week of this consolidation. It looks very similar to the one we saw last year, just after the break of 1375. And that's why I think we're very close to a breakout in gold. And we could potentially go even higher than 1650, maybe 1700 within the next few weeks. It could be quite quick. What's my view on gold? Many of you know my view on gold. I look at gold as insurance. Stacking is the best way, in my opinion. Physical gold and silver. Of course, for those of you who are traders, there is an opportunity here. Dollar cost averaging as well is the best thing to do, in my opinion, if you're able to do it. It's getting harder and harder to save these days, of course. For my viewers in Europe and especially in the UK, they can use my promo code MONERO64 at Gold Investments. I've been doing business with them for years. They have very competitive prices. And with my promo code, you get 0.5% discount off the offer price. You can go pick up your physical gold with them in the City of London, or they'll ship it to you insured. They will even store it for you insured in your name in a vault. And that's what they do. On to silver now. Silver is at $17.90, up 12 cents, outperforming gold slightly. We want to see silver outperform even more. I think silver is going to follow gold this time instead of gold following silver. And it might even accelerate and outperform gold. So let's skip the stock market as I covered that earlier. Currency market, we've seen sterling or cable drop below 130. We're right now at 129.96. Low has been 129.85. Euro is unchanged, 108.35. Dollar is down 0.2% against the yen at 108.35. The dollar is up 1/3% versus the Chinese yuan, just above 7. WTI crude is down 1.1% or 60 cents at 51.75. So yes, the message this morning from me and from looking what's happening is that the markets have been complacent, in my opinion, about what's happening in China. We could see a little bit of volatility going forward here in the markets. Am I saying the stock market is going to crash? No, but it could correct. It could have a sharp, fairly sharp correction downwards. I think people have been too complacent. If you enjoyed this video, make sure you hit the like button, share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.